This conference will now be recorded.
Okay, you guys, welcome back to this training. In this video lesson, I just want to go over some suggested routines that I put together that I recommend. And this is all from all my trial and errors on, what to basically what would I recommend? What should be your routine when you approach these charts? So let's get right to it here. So this is going to be some suggested routine as to how you should approach, your day when you're looking to trade. How should you go by your day looking for these setups? So again, what I recommend is the first thing you should always do is when you come to your office, home office, or wherever you're planning on trading from. Your laptop at the kitchen table, living room. Doesn't matter. That's your office. That's where you're going to be placing trades. Living room, couch, doesn't matter. Off your laptop, or you have an actual dedicated area so you can focus and place these trades. Okay. So the first thing you should do when you come to your office is check the news. The best place to do this is forexfactory.com. You can go on there, or you can go. The one that I use is MyFX. MyFX. I'm able to see what currency pairs are going to get affected uh, well, at the right times. Um, Again, be aware that the news disrupts the technicals and should be avoided while learning. Also, be aware that the news can be used to help the market makers achieve their targets. So sometimes you'll get an aggressive M, an aggressive W. You'll be like, oh my God, look at that second leg W. It paid out over 200 points or whatever the case may be. And most likely it was some news that was released. Okay. So sometimes, again, they'll use the news to justify that move. So therefore, try to avoid, again, trading while there's news, that's going to be going on. Okay. Um, though once you have more experience, again, you'll be able to identify the new setups when they're approaching. Okay. Once you check the news, you should avoid trading non-farm payroll. For everyone that's brand new, if you don't know what non-farm payroll is, you can Google it, but to get more familiarized with the term, but non-farm payroll, NFP, this is what we typically call it. And let me grab a color pen here. Okay, NFP. That's what we normally call it. NFP, non-farm payroll news. That's every first Friday of the month. Every first Friday of the month. Okay, every first Friday of every month, it's considered non-farm payroll. So let's just say the month ended on Thursday. Let's just say Thursday was the 31st on Thursday. Well, non-farm payroll is not the next day; it's the following week. Okay. So again, it's every Friday of every month. There's going to be some news that's going to be released. So avoid trading when the Fed is speaking, and because it's going to affect any USD currency pair on that trade. Non-farm payrolls, basically the US. So any pair that has the USD in it, it will affect that currency pair. Okay, so as a trader, your job is to identify the condition and apply the appropriate action. Okay, so we already know, let me switch this back here. We already know that the market has three conditions. Okay, write this down. You need to, this is part of your lesson. If you haven't wrote this down already, we're going over it again. And that's the beauty about trading this method. There's once you get this down, there's really not going to really they're not going to catch you by surprise. I mean, it's pretty much the same move, the same routine, all the time. You just have to be patient and sit back and wait for the cycle, the stop hunt, the W, wait for that third level. So let's not complicate this. This is really we're keeping it simple, stupid. It's really simple. Your biggest obstacle is going to be your emotional if you're emotional or if you don't have patience. And again, if you're emotional, stressed out, normally that's because you're over trading that account. Okay. If you want to make a few $100s on a trade and not risk a lot, you need to have more money in your account. Okay. Otherwise you would be risking a little bit more. But you can always, again, if you're stressed out, it's because you're over leveraged in the account. You should always have to trade another setup. Like one trade should not make you or break you. You get me? We're gonna take losses. That's a given fact. It's part of the business. So anyhow, back to this. Again, there's three market conditions that we've talked about before. Okay, so number one, consolidation. Identify the consolidation slash accumulation is the same thing, which is going to anticipate a stop hunt. Okay, number two, the stop hunt. After accumulation comes the stop hunt. It accumulates through Asia. And if they're going to drop this, we are looking for stop hunt high drop. Anticipate the stop hunt. Three pushes forms the first leg, second leg. That's your stop hunt high drop. And that's where the true trend comes in. The true trend is going to be slow and steady. Okay, remember that. The real moves in this business is slow and steady. Okay, if you start seeing aggressive moves, fast moves, is moving very fast, most of the time that is a fake move. Okay, so it is important to have a routine when you examine your charts, analyze your charts, and take trades. The following suggestions, I suggest the following routine. Before you hit the 15-minute trading window, look at the hour. Again, you're going to analyze on the 1 hour. Okay, you're going to analyze on the 1 hour is where you're going to form your directional bias. You're going to confirm the levels, the pivots. What level are you in? How many days has it dropped? Has the high of the week been formed? The low of the week? Okay. Once you formed your directional bias, you're going to switch over to the 15-minute. Okay. So again, so observe on the 15-minute. Before you go to the 15-minute, look at the hourly chart and verify the count, the level count, the days. Okay. Identify the high or the low. Then in the 15-minute trading window, perform your intraday level count, like count the levels within that day, intraday within that day. Okay. And then wait and see if, again, wait and look and scan for the agent session to be 50 pips or under. It could be 55, that's fine, 60, that's no big deal. So you wait for or identify the price moving out of the agent session range using three swipes. Remember the three vector candles, the three pushes to the upside or to the downside. Most of the times you're going to see them in three swipes, three pushes, three bursts. Sometimes it could be one candle, two candles, and sometimes it'll be perfectly three candles. Sometimes it'll be six candles, but there'll be pushes, bursts like this. Let's just say out of the agent session box, and I'll show you some charts right now. Um, Market consolidates. If they're going to give you, if they issue you a W at the stop hunt low, you're going to see one candle and maybe one, two candles, and then drops, one candle, drops. In a sense, this is one, two, three pushes, three vector candles to the low. Okay. And then pulls back, second leg, close above the catch up. You enter, your stop loss goes below the low of the day. And then the trade should go. Okay. That's what I mean by the three vectors, three pushes to the higher to the low. Okay. And if a trade does not see substantial profit after 2 hours of entering, take a small loss or a small profit. Something's going up in the market. They're not ready to take off yet. They might go against you to induce traders to take the wrong position again. Okay. So look for the evidence of the M or W formation that takes somewhere between 30 to 90 minutes to develop. Okay. For additional confirmation, look for evidence that is supported or resisted by the pivots. So once you see stop on low, look at the pivots. Are they working stop on, if it's stop on low, they're probably working that M1 or that M2. Look at that. Look at the average daily range. Has it been hit? Has it been met yet? The high lows, the EMAs. What's going on around the EMAs? Is price being rejected? Okay, and then pull the trigger. Place the stop and the target. If you plan to use a fixed target take profit as you're starting off, I would normally suggest a fixed take profit of 50, because sometimes even if you're going in the wrong direction, you might catch 50 points going in the wrong direction. So, and then it reverses on you there. So put a take profit at 50 points. Okay. So plan for additional entries and pull the trigger when when it's relevant, when the criteria has been met, when these entries may be taken from the TDI triggers. Look at TDI. Do you have a stop on low? Do you have a shark fin? What's the current price? The signal line. What's current price doing? Is it already angling sharp? Did it do a shark fin? Is already hooking inside? Okay, and we'll go over it right now in some charts. So as the trade progresses, continue to count and try to stay with that trade while the count remains valid. Okay, obviously, if you're trading it and you see three, and you're in the trade and you see three levels of rise, and they start forming an M, then that's evidence that the move has reached level 3 and it starts to go choppy behavior, meaning it's consolidating, not moving anywhere. Probably a reversal pattern is coming. Exit the trade. TDI is going to help you manage your trade. Okay. So you guys already know, accumulation channel, agent session under 50 pips. What level are you in? What's the count? Okay. Third level triggers. If you see an M or a W pattern, go back. Is that M at level 3 or that W at level 3? Because they could fake you out with an M at level 2, and it goes completely the opposite direction. Make sure M or W's are level 3. Okay. And make sure it's the high of the day, the low of the day. Is it a lock? Have they worked that area 30 to 90 minutes? Okay. Start looking at the pivots. Are they working that M1, M2? And then the TDI signals. Okay, so that's what I recommend, as far as your check downs and your scans of what to do when you show up to the charts. So let's see, let's look at some trades here real quick. Okay, like for instance, if I were to show up to this chart right now, okay, I'm looking at it. Okay, I mean, okay, what's the first thing you want to do when you show up to the chart again? What has the market been doing the last 3 to 5 days? If you can't pinpoint what has it been doing, or it's been choppy all over the place, you can't really pinpoint where did it reverse from, then you simply stay out of that trade. Like notice right here, market's been dropping, dropping, dropping. It reversed here, but then it reversed back down. Okay, this could be a reset. Not I wanted to see the reset up here, but this should continue to rise just by looking at it. Why? Because I can confirm the count. Level 1 is being confirmed by that 1350 crossover here. The ketchup has crossed the water. Okay, so just start pointing this out. Ketchup has started the water. But notice how the water never crossed the mayo yet. Okay, so we could get some movement back to the upside. So it hasn't gone up the full 3 levels. So tonight, if I'm going to buy this, because the level 2 has not been confirmed yet, I anticipate in stop on low, maybe they'll work this level there, stop on low rise. If they do that, I'm looking to buy this trade. I have to look at what TDI is telling me. Stop on low, shark fin low. Are they working the pivots? All this comes into play. All I need is three good confirmations, and then I wait for my entry to close above the catch up, and I simply place that trade. If I don't get that as a new trader, I stay out of that trade. I only want you to take trades when they're giving you the signals that you're looking for. Let the market come to you. Okay, let the market come to you. Don't force your ideas on the market. Stick to the rules and you'll be ahead of the game. Let's look at Australian USD. Now, look how this trade, a nice trend to the upside. It reversed here. Okay, confirm the levels. 1350 crossover. I have it level 1. I have a 50 Mayo crossover that confirms that they're working on level 2. ADR, how many points has this trade moved from where it reversed to here? Okay, I don't have my indicator there, but let me put in my weekly ranges. Click hold, drag over. You should have already a template preset with this on here. Your weekly structured template should be set. Hit OK. Okay. This pair moves 249 points. That's the 3 times the average daily range. It moves in threes. That's what we have it in threes. 249. So let me measure. Do I have 249 going in one direction? I've exceeded it by 50. Okay. If you go back to the lesson on resets, this could be a reset. Notice that the reset typically comes around the Mayo, the 200, or the Blueberry. So we'll see how this plays out tonight. If I'm going to sell this, what I'm looking for is stop on high, drop, because they could do this. Consolidate, stop on high, drop to the Blueberry, and I'll see how they handle that Blueberry because it might reject and continue a new trend to the upside. Okay, but again, I'm not going to get in if they don't do the stop on high in pattern, shark fin on TDI. I'm not going to get in if they don't give me that. So if they don't give me that, I don't, because they're not giving me what I want, I simply stay out of that trade. Keep it simple. If they don't give you what you want, right, especially right now that you're learning until you get more experience, then I simply stay out of that trade. Okay. The only reason I'm saying it should be a level 3 drop because they haven't dropped 3 levels. It's already met 3 times ADR, but again, it's already exceeded 3 times ADR. So, we'll see how they handle this pair tonight. That's like I said, that's how you mark up your chart. It takes you less than a minute to just go through your check down. Okay. Come on, you're the quarterback. Read what the defense is giving you. Okay, what are they doing? Okay, I see level 1. I see level 2. Okay, tonight I'm expecting that level 3. Okay, they have already exceeded 3 times ADR, so I'll be on alert on this trade to see react to the market's actions. Okay, so that's how we'll approach the chart. So as keep practicing. That's the purpose of the demo. Go into again, pick up a few pairs that I recommend. Again, if you're I recommend London. So any pairs that have the GBP, GBP USD, GJ, Euro Pound, they're going to move Euro Swiss franc. They're going to move in the London session. So pick about 4 good pairs and just stock each pair. You want to know what day in the cycle you're in each pair. And that's going to make your life a lot easier, because if you're following is a cycle, if you're stock in one pair, you're going to nail that trade. You just have to be patient and just wait for it to cycle out. Wait for a new trend to start, and you'll nail that trade. Oh, I'm at level 3, I'm waiting for this W, or I'm waiting for this M. And it's going to make your life a lot easier. It's going to make the trades very simple. Okay, you guys, I'll see you guys in the next videos.